Hello there, welcome to David's Investment Analysis channel. Today I'm going to be doing something a little bit different. I'll be providing an update on Hyliion, which is SHLL traded on the New York Stock Exchange, looking at the potential reasons on its recent surge as well as some updated news. And then I'll conclude on whether I think the stock is a buy at its current price and whether I own any shares of the business myself. And if I do own some shares of the business, what am I intending to do with those shares? Before I start, I really appreciate if you could like my video. I do spend a lot of time looking at the details and it really helps me with my channel with the algorithm. And then once I reach 2,000 subscribers, I will be releasing a video on my top 7 individual stock holdings in my portfolio. So if you do not want to miss out on that, please do subscribe and click the bell notification. And if there's any other companies you would like me to cover in the future, please do leave it in the comments below. Now let's get to it. Hyliion, ticker symbol SHLL. I've covered this one in the previous video. If you haven't had the chance to watch that one, I left a link at the top right or in the description for you to view it. So the stock price of SHLL went up over 32% in the last 5 trading days, and not much was announced, but I do have some speculation of why it's up so much within such a short time, and here are some of the possible reasons. If we look at the stock chart, it all started on August 13th, but if you try to search up for any news, there weren't too much. So the first reason is the possibility of retail buyers reacting to financial institution buying as disclosed in their quarterly 13F SEC filings. For those that do not know, Form 13F is a quarterly report that is required to be filed by all institution investment managers with at least $100 million in assets under management. It discloses their equity holdings and can provide some insights into what the smart money is doing in the market. So let's see if there are any significant filings around August 13th. I found this one from Youth Investment Group Australia that says, usually when a company rises out of the blue, it was an institution pouring into a gigantic amount of cash. Institutional buying seems to be the reason for SHLL gapped up today, which is August the 13th, especially as the number of hedge funds have started increasing their positions. For example, Cambridge Investment Research recently acquired 21,650 shares valued at $594,000 in the second quarter. Also, hedge fund Alberta Investment Management increased its stake from 375,000 shares to 850,000 shares in the last quarter. This is actually referring to Q1. They actually sold some shares in Q2. Once the institutional buying news got out, retail investors likely reacted positively by buying SHLL. Institutional buying plus reactive retail investors are probably the reason for today's surge. I clicked on the link that was provided. It pretty much says the same thing about Cambridge's new position SHLL, as well as several positions held by funds and financial institutions. But majority of the ones listed here relate to their Q1 positions, and actually some of the ones here actually dispose some of their positions. So let's look at a more updated one. We can see here from Fintel that shows the 13F quarterly filings, and can see here on the 13th there were actually 2 funds that disposed all of their shares in Q2 indicated in the red-pink highlight. Meanwhile, several number of funds reported their investment in SHLL, and the green highlight is newly purchased. And we can see here that Alliance Bernstein LP purchased 400,000 shares with close to 11 million that was disclosed. And Barclays PLC reported an increase of 39% in their holdings of SHLL with 509,000 shares valued close to 14 million. Also, as mentioned earlier, Alberta Investment Management Corp actually disposed 64.7% of their shares in SHLL, but still have 300,000 shares valued at 8.2 million. And we can see here on the 14th, there were significantly more institutional buyers than sellers reported in Q2, and a couple I'd like to highlight. Falcon Edge Capital LP during Q2 newly purchased 1,050,000 shares valued at 28.8 million, and Severita Capital Management LLC during Q2 newly purchased 890,000 shares valued at 24.4 million. Based on what we just saw, retail buyers reacting to institutional buying as disclosed in their quarterly 13F filings may be likely a reason for the pop on the 13th. So what is another possible reason? In addition to the pop on the 13th, it had another one on Monday the 17th, jumping more than 11% that day alone. It may be because of positive findings in their Schedule 14A filed with the SEC by Tortoise Acquisition Corp. It included Hyliion June 30th, 2020 financials and some possible hints to when the closing of the merger would be. So let's look at it. I printed out to PDF the Schedule 14A filed with the SEC by Tortoise Acquisition Corp. And it was 435 pages. So you can see that I do spend a lot of time researching on these companies. So I really appreciate if you haven't yet, please like my video and subscribe. I've only highlighted on items I think that are interesting from the filing. A lot of the information with them were also discussed in my in-depth video on Hyliion already. and if you haven't watched it yet, the link is in the description. Looking at their 6 months ended June 30th, it's pretty much half of 2019 numbers, except for the interest. For the 6 months, it's already as much as the full year 2019. So there must be a large debt relative to Hyliion's business. We'll look into this in more detail later. There's like 40 pages of risk factors. I've highlighted a few that are interesting. Hyliion has identified material weakness in their internal control over financial reporting, which, if not corrected, could affect the reliability of Hyliion's consolidated financial statements and have other adverse consequences. In the course of preparing the financial statements that are included in this proxy statement, Hyliion has identified a number of adjustments to its financial statements that resulted in a restatement of previous issued financial statements. These adjustments relate to accounting for a business acquisition, accounting for issuance of convertible notes payable and embedded derivative liabilities, accounting for the costs associated with the materials and supplies purchased for research and development activities, and other miscellaneous adjustments. This is a little bit concerning because there's a lot of adjustments. Restating financial statements is usually a very terrible thing. Investors should bear in mind this and hope they can fix this problem going forward. Hyliion plans to accept reservation orders for the sale of its electrified powertrain solutions that are cancelable. And Hyliion's initial pre-launch sales order for a HyperTruck ERX equipped trucks is cancelable. So I see this as both a positive and a negative. On the positive side, Hyliion is planning on accepting reservations and would allow Hyliion to estimate and get an idea of the desire for their products and allow them to plan better, and the announcements of reservations is usually good for the stock. However, on the negative side, they are cancelable without penalty. So their contract previously announced of 1,000 trucks equipped with Hyliion's HyperTruck ERX system with agility is cancelable without penalty. Hyliion is highly dependent on the service of Thomas Healy, its chief executive officer, and if Hyliion is unable to retain Mr. Healy, attract and retain key employees and hire qualified management, technical, and vehicle engineering personnel, its ability to compete could be harmed. Mr. Healy is the source of many, if not most, of the ideas and execution driving Hyliion. I've watched several of his interviews and absolutely agree that he is very important to Hyliion. He appears to be very knowledgeable and smart, and at such a young age being able to lead Hyliion into the merger transaction. As CEO to a company is very important. Just look at Lisa Su, AMD CEO. She helped turn around the business, and since she became the CEO in 2014, their stock price went up over 2,000%, or that's more than 20 times. I've covered AMD in a previous video. I've linked it in the top right or in the description for anyone that is interested. Perhaps not in the near term, but Hyliion intends in the future to expand internationally and will face risks associated with its international operations, including unfavorable regulatory, political, tax, and labor conditions which could harm its business. To me, this is very positive in the longer term, expanding internationally. That's it for the risk factors. Many of the other ones are very common ones. I've linked the SEC filing in the description for anyone interested in reviewing more of the risk. Let's look at some of the financials. What we see here is the unaudited pro forma condensed combined balance sheet of Tortoise Acquisition Corp and Hyliion. We can see after the merger there will be $555 million of cash from the merger as discussed in my previous video, and earlier noted there was a lot of interest expense, so we expected that there would be a lot of debt. And we can see here the majority of debt of $31 million will be paid off with the cash, leaving approximately $528 million of cash for Hyliion to bring ERX powertrain to production. After the business combination, there will be minimal to no debt and a lot of cash. There were also convertible notes in Hyliion's balance sheet of $25 million. These convertible notes will be converted into shares per merger agreement. They were considered in the initial merger valuation as well. And their MD&A, which is Management Discussion and Analysis for the second quarter ended June 30, 2020, some interesting things to note. Hyliion has deployed demonstration hybrid system units in a number of customers. I believe the number of system units is 20. We'll see this a little bit later. And Hyliion's HyperTruck ERX system is generating significant interest from its current customers and potential new customers. This is very positive, and it led to the contract with agility. Hyliion expects its research and development costs to increase for the foreseeable future as Hyliion continues to invest in research and development activities to achieve its operational and commercial goals. Not only that, but also Hyliion expects its selling, general, and administrative expenses to increase for the foreseeable future as Hyliion scales headcount with the growth of its business and as a result of operating as a public company, including compliance with the rules and regulations of SEC, legal, audit, additional insurance expenses, investor relations activities, and other administrative and professional services. I'm fine with these increasing costs going forward, and it's totally understandable as they could continue to need to spend money to grow its business. And they have $528 million of cash, and per management they expect they have sufficient cash until they start commercialization in 2022. The following is their year-to-date Q2 results compared to 2019. Both research and development and selling, general, and administrative increased a bit. There shouldn't be any more interest going forward after the merger as the loans are paid and the convertible debt is converted into common shares. As an early stage growth company in the pre-commercialization stage of development, the net losses Hyliion has incurred since inception are consistent with Hyliion's strategy and budget. Good to know that they are within their strategy and budget. Hyliion will continue to incur net losses in accordance with Hyliion's operating plan as Hyliion continues to expand its research and development activities to complete the development of Hyliion's hybrid and HyperTruck ERX systems and scale Hyliion's operations to meet anticipated demand. Again, here it confirms, Hyliion expects that with the funds raised in connection with the business combination, no additional capital will be needed prior to commercialization and production, and that should be until 2022. Some interesting numbers here. There were options granted in January 2020 with a fair value of 34 cents, and within just a few months, the fair value of the shares per merger transaction is $10, and now it's over $26.40. Don't we all wish we got in at 34 cents a share back in January? And per MD&A, the completion of the HyperTruck's ERX prototype in March 2020 was the primary driver of the increase in the estimated fair value of Hyliion common stock from the date of the option grants to the estimated merger price of $10 per share in June 2020. I can't imagine, with a share price right now of $26.40, if you bought it at 34 cents in January 2020, you would have a gain of 7,664% or 76.64 times the value that you purchased at. And if you had invested $10,000, it would be worth $776,471 now. This is pretty incredible, but this is pretty common when a private company becomes publicly traded. And here it discusses about the convertible debt and is expected to be converted into common shares. Timing of the next financing and default events per management means their best estimate of the future settlement of the respective convertible notes. This sounds like they were 95% sure they would achieve financing around the last 2 weeks of September, and perhaps hinting that the merger transaction will be closed around this time. Although we do see later that they can raise additional funds if the transaction is not yet closed by mid-September, and based on the cash burn rate, they would need financing around that time. Regardless, Hyliion needs cash around the end of September from someone else or from the SPAC. As discussed earlier, their hybrid systems has been installed on approximately 20 of Hyliion's initial customers' commercial vehicles and has accumulated over 2 million real-world road miles on Class 8 commercial vehicles. And this is positive to know that they already have their systems on some of the trucks. Hyliion intends to design, develop, and sell additional commercial transportation products in the future. For example, Hyliion's hybrid technology could also be utilized on trailers for either trailer electric loads, such as refrigeration, or to provide power assist or additional battery charging to vehicle when driving. This is very positive to know that they can use the technology for other product offerings in the future. Looking at Hyliion's financials as of June 30, 2020, they have $3.3 million of cash remaining, with $26.7 million of debt and $25.8 million of convertible debt. As reflected on the pro forma statements, the debt will be paid off and the convertible debt will be converted into common shares at the merger. Looking at the cash flow from operations, assuming no financing is done, Hyliion needs about $3.2 million per quarter, which is around what they has as of June 30th. So as mentioned earlier, they will need cash by the end of the quarter from the SPAC or another party. Provided that the merger does go through, they will have $528 million of cash, which is far more than enough considering they are burning only $3.2 million of cash a quarter, even if all costs are expected to increase. Let's look at the stock chart with Tesla and Nikola. It appears that it's moving along with Tesla. Perhaps that is the reason for the jump in price. Or perhaps investors were fear of missing out and watching it pop and buying into the stock. So those are the reasons perhaps why we saw the surge in the stock price of SHLL. Now let's look at a couple of more recent updates. Per Justia Patents, Hyliion's patent on trailer-based energy capture and management has been granted just yesterday, August 18th. The through-the-road hybridization strategy is proposed to facilitate the introduction of hybrid electric vehicle technology in a significant portion of its current and expected trucking fleets. The technologies can be retrofitted on its existing vehicle. It can also be built on new vehicles. By supplementing motive forces delivered through a primary drivetrain and fuel-fed engine with supplemental torque delivered at one or more of electrically powered drive axles, improvements in the overall fuel efficiency and performance may be delivered, typically without significant redesign of existing components and systems that have been proven in the trucking industry. And just today, it was announced that Hyliion and Dana joined forces with Idealist to demonstrate hybrid systems for its Class 8 vehicles. And Andy, Vice President of Affiliate Services at Idealist, said, "With Hyliion's hybrid system, we expect to see great results in fuel efficiency, vehicle performance, cost savings, and emissions reduction, all of which are critical decision factors for our customers. So a little bit about Hyliion. Hyliion has served the transportation industry since 1982 with over 400 locations in the US, Canada, and Mexico. Hyliion ranks as one of the North America's largest full-service transportation companies. The Hyliion fleet numbers over 45,000 trucks, tractors, and trailers. And this is very positive for Hyliion. I hope these tours and tests will bring Hyliion more sales. Now let's look at an updated valuation. The current market cap of Tesla is $350.1 billion, Nikola is $15.3 billion, and Hyliion is at $4.3 billion. We'll ignore the price to earnings ratio as Hyliion currently doesn't have any positive earnings, but looking at the price to sales ratio, Hyliion trades at the cheapest amongst the group, trading at 2.04 times estimated 2024 sales, which is reasonable compared to Nikola. Nikola trades at 2.15 times more expensive than Hyliion on a price to estimated 2024 sales ratio. And if SHLL or Hyliion trades at the same valuation, the shares would trade at $56.85, suggesting an upside of 115.3%. But even if we trade at half the valuation of Nikola, it would trade at $28.42, suggesting the upside of 7.7%. Please note that the valuation of Hyliion is more expensive than Fisker, Lordstown, and Canoo on a price to 2024 estimated sales, although they are not exactly in the same industry. While the valuation appears to be very attractive, but please note that these valuations are based on management's projections of revenue only. Interested investors should consider whether these projections are reasonable and apply some level of margin of safety. Investors should also consider the overall business before making a decision. Conclusion. In my opinion, at today's price of $26.40, I think it is a buy if you have a longer term horizon because of the following reasons. Hyliion's HyperTruck ERX is a net negative carbon emissions powertrain that offers greater performance, longer range, shorter refuel time, more payload capacity, and cheaper refuel costs. There is already a network of natural gas fueling stations already available across the US. Hyliion has a great proprietary technology with the ability to recharge batteries with what would have been wasted kinetic energy to power its vehicle. As people move away from diesel trucks becoming more cautious of the environment, there will be a high demand for natural gas trucks, and Hyliion could play a big role by providing the powertrains to OEMs. They already have a binding pre-order of 1,000 trucks with a large global logistics company, even though it's cancelable without penalty. They also have a very experienced management team, some with over 20 and 30 years of experience. The valuation is still somewhat reasonable, especially if you compare to Nikola, trading at approximately 2 times 2024 sales, with a very strong balance sheet of approximately $520 million in cash sufficient until commercialization in 2022. But I do have some concerns. The risk with the global health issue and the possibility of the decrease in demand for trucks, or companies delaying the upgrade of their fleets. Competing with Tesla or Nikola. Tesla is really well established and have been in electric vehicles business for many years. Competition is good for consumers, and now consumers have more choices and perhaps finally shift from diesel trucks to these alternatives. I also believe that there is sufficient market share for allowing all these three players to do well. Natural gas trucks have been around for some time now. They have not been able to take off because of various reasons, and Hyliion may run into similar issues. The biggest risk is if the deal falls apart, the shares would go back down to $10 per share. The transaction is still subject to several closing conditions, but I think it is expected to be closed near the end of September as discussed earlier. Disclosure: I currently do own some shares of SHLL. It's a full position on my portfolio. I do not intend on adding any shares or selling any shares in the near future, but if it continues to surge and go up, I may sell some shares in the near future. Hyliion and Tattoo Chef are my two favorite SPACs that are emerging soon. I would love to continue to hold both businesses for the long term, but if any of them do surge significantly in such a short time, I may be forced to sell because of valuation. That's it for now. I spent a lot of time preparing for these videos, so I really appreciate if you could like and share my video. And if you do not want to miss out on any future videos, please do subscribe and click the bell notification. Thank you for watching. Until then, see you next time.